Hello, I'm Hickey from interest.co.nz and welcome to another in our series of double shot interviews. In fact, this is our weekly currencies review and outlook with Dan Bell here from HiFX. Welcome back, Dan.
Thanks, Bernard.
Another busy week in the world of currencies and economies, starting with America last Friday night with their jobs report, which showed perhaps the economy starting to recover. What was the view of the markets?
Yeah, so the US reported their non-farm payroll data last Friday night. Market was expecting something around 185,000 new jobs for the month of April. Came in at 245,000 new jobs, so pretty strong number. However, unemployment actually ticked up, expecting 8.8% unemployment rate ticked up to 9%. However, it tends to be a reasonably volatile series, the unemployment rate anyway. But they also revised up the last 2 months for the employment growth. So strong gains for February and March, and obviously stronger gains again in April. So a little bit of an uptrend in the US employment situation.
And then everyone got that surprise on the weekend with talk that Greece might withdraw from the euro, and there's some sort of emergency meeting. Again, it's back to that old story of Greek worries and European fears.
Absolutely, yeah. The Greek situation, we knew it hadn't gone away. It had just it had been taken off the headlines for a few months. So, an emergency meeting on Friday. The EU ministers all flying off to Luxembourg to talk about it. There was rumours that Greece was going to be leaving the European Union, and they were denied, obviously, over the weekend. And I think the net result of that meeting is that Greece will need a further bailout from the EU and the IMF. Their current requirements for 2012 are about 60 billion euros, and with their bond yields currently yielding up over 20%, there's no way that Greece can actually go to the market to get the funding that they need to run their economy. So bottom line is Greece will need further additional funds from the EU.
And without that bailout, there's the risk that many of the banks in Europe will have to take big write-offs on their Greek debt. Could you explain for us the risks there of contagion, of how that would affect the banking system and the banks in Europe if there was going to be a restructure or a default?
Yeah, absolutely. A lot of people talk about the Greek situation as a sovereign debt crisis, which it is, but the bottom line is a lot of the European banks are heavily exposed to Greek debt. So it's effectively the European banks that have been buying into the Greek bonds. So if we see some type of restructure and the banks are required to take a haircut, obviously there's going to be a flow-on effect to the broader banking sector in Europe. A potential flow-on effect to the wholesale lending markets globally. So the contagion effect is from the banking sector specifically. So it's not just the EU that's going to be out of pocket if Greece goes under. It is going to be the European banks, who are made up of fairly well-known banks from Europe and from the States. So that's going to have an impact on a broader level as well.
So how did this all affect the euro versus the US dollar and the Kiwi?
Well, the euro got slammed. The euro was flirting up around the sort of 150 level last week, 149.5. It's traded as low as 141, 150 this week.
Big move, isn't it?
Yeah, so a big move, and obviously the Kiwi versus the euro has strengthened on the back of that. Kiwi euro is trading over 55 at the moment, and the Aussie euro actually traded as high as 75 odd euro as well. So, but for now, I think it has settled down in terms of the price action we're seeing in the currency markets. So we saw that initial weakness, but we've settled down around the sort of 142 level in the euro versus the US dollar. Strangely enough, the market is still pricing in another rate hike from the ECB in July. So and some of the rhetoric coming out from the ECB officials is that, hey, we're still going to be raising rates in July despite the problems in the peripheral countries. So
you have to wonder how the likes of Greece, Spain, Portugal, Italy even can handle an increase in that European Central Bank rate.
Well, that's right. It's really a tale of two very different economic structures in Europe. Germany continues to perform very, very well, but on the other hand, as you mentioned, those other countries are struggling. So, you've got a few economists around the world asking questions about the strategy of the ECB and whether or not it's the right thing, because ultimately there are some pretty serious issues and concerns there. And do they need higher rates? Well, inflation is one thing, but on the other hand, the growth prospects for most of those peripheral countries are looking pretty average at the moment. So it's going to be interesting to see how it all plays out.
Now, elsewhere in Europe, we saw in Britain in the last week the Bank of England come out with a statement and see some inflation figures. What's happening there in Britain, and what did that do to exchange rates, particularly the pound Kiwi cross?
Yeah, the UK don't have a good mix on at the moment. They've got inflation, the inflation forecast is for over 5%. Part of that is a VAT impact, so they've had a value-added tax thrown in there recently. But their inflation figures are going to be well above the 2% target that the Bank of England is trying to keep it in. So the market has taken the most recent inflation forecast report from the Bank of England to suggest that we are going to see interest rate tightening from the Bank of England this year, probably to the region of another 50 basis points by the start of next year. So perhaps 50 basis points of tightening this year, taking their official sort of cash rate up to 1%. In terms of the way the pound's been behaving, on one hand, investors are seeing that as a positive from a yield point of view. On the other hand, economic data continues to disappoint. So over the last sort of 48 hours, the Kiwi versus the pound's actually been quite strong, trading as high as almost 49p. Wow. From lows last week down under 48. So again, be interesting to see how that plays out. The Kiwi's actually been quite a strong performer over the last week against most of the major currencies. So,
just coming back to our part of the world, China, we watch it closely now. We saw some numbers on inflation this week, and also some news of another tightening in monetary policy.
Yeah, the inflation numbers from China this week didn't really surprise. They came in, CPI came in around 5.3%, not too far off the forecast. The big news overnight was that China has raised the reserve requirements for their banks again by another 50 basis points, taking that up to 22%. So this is part of their program of trying to tighten monetary conditions, slow down their economy. And I think it is having an impact on investors and sentiment in general. We've seen some pretty wild swings in commodity prices over the last fortnight. Last week, for example, commodity prices were down close to 10% on the week. They had a strong recovery earlier on in the week, but again, we've seen quite a bit of a choppy price action in commodities.
Very volatile commodity prices, perhaps a worry about action in the future.
Yeah, they are, because commodity prices tend to be more volatile than stocks in the first place. We had CME Group, who control the Commodities Futures Exchange, increase the margin requirements for oil by 25% at the start of the week. So there's obviously some concerns about some of the speculative investment behaviour in commodity prices, the potential impact of a slowdown in China, the potential impact from the European sovereign debt crisis. And I think there's been a lot of positive news priced into equities as far as the stronger than expected corporate earnings season in the States, that investors are starting to really question whether or not we've got some kind of sustained rally in the global economy that's going to justify some of the valuations that we're seeing in stocks, commodities and currencies for that matter. So I think the mood has changed. Sentiment is starting to look a little bit fragile, and it wouldn't surprise me to see a decent amount of volatility over the next few weeks.
Now, another country that's dependent on China is Australia. This week we saw some retail sales figures and some jobs figures, which are perhaps a bit negative for the Australian economy.
Yes, the jobs figures were a big surprise yesterday. The market was expecting the Australian economy to have added close to 20,000 jobs for the previous month. In fact, they lost 20,000 jobs, and full-time employment actually dropped 49,000. So a really bad number, considering Australia's been reporting some really strong numbers in their employment situation. To put things into perspective, the employment numbers in Australia for the previous 3 months have been extremely, extremely strong. So perhaps this is just a little bit of a mean reversion, if you like, where they're starting to sort of settle down. But the Aussie dollar got hit quite hard on the back of that, losing close to a cent against the US dollar. The New Zealand dollar went from the sort of low 73 level up to a high recently, or overnight, of about 74.70. So pretty big move in the Australian dollar, and just sort of goes to show how much sort of hot money, if you like, is floating around there.
Now, looking ahead to next week in New Zealand, the big event will be the budget, and whether or not the government can pull the budget back into surplus anytime this century, and whether it can keep Standard & Poor's happy, avoid a credit rating downgrade. How closely are the markets, currencies going to watch what happens in the budget?
Yeah, I mean, we're always going to watch the budget. It doesn't necessarily have a huge impact. You know, the RBNZ tends to have a bigger impact. That being said, the RBNZ was out this week with their financial stability review, and the markets didn't really react to it. So the budget next week, probably not a huge amount to sort of trade off, if you like. But yeah, I think, you know, in the background, John Key and National will be thinking about Standard and Poor's and how they see New Zealand's position. So it will be a bit of a concern if there's some surprises. I don't think there will be, though.
And on the inflation front, everyone's going to be looking at what's happening in the world's biggest economy next week, America. What's the view there?
Yeah, so inflation numbers are released out of the States tonight. So CPI is released tonight. The core inflation, excluding food and energy, is expected to come in somewhere around about 1.3%. While the headline number is expected to come in over 3%, so around 3.1%. Now, you've got a lot of people talking about the inflation outlook in the global economy. Obviously, the policymakers in the US tend to look at the core number, and the recent rhetoric from the Federal Reserve is that, you know, the high commodity prices are transitory. So they're still looking at that core number, and you know, a lot of analysts are saying, well, at the end of the day, you know, we're not seeing any wage price inflation in the States. They've still got unemployment at 9%. And you know, for that to continue, it's difficult to see policy tightening in the States anytime soon. But yeah, the inflation number will be interesting tonight anyway. And
as an interesting factor in what the Federal Reserve might do with its quantitative easing, which is due to run out at the end of June.
Mm-hmm. Well, that's right. You know, quantitative easing will run out at the end of June, and you know, I think that's also, you know, part of this the sort of mood change, if you like, in the global markets. There is going to be still a lot of surplus cash floating around, and ultra loose monetary policy is still in place. But you know, I think investors are just looking towards the future and thinking maybe there is some tightening coming up. You know, it's probably not going to be this year, but you know, we're getting through this year already pretty quickly. So suddenly you start thinking, if the States are tightening interest rates, China's tightening interest rates, you know, and perhaps, you know, we're going to see a little bit of a slowdown in that, you know, in the global growth outlook. So.
Excellent. Dan Bell there from HiFX talking about currencies action in the last week and the week to come. This is a weekly currencies report. I'm Bernard Hickey for interest.co.nz.